Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the March 17th, 2021 show called Don't Shoot the Messenger. Me, I am the messenger, but you come here to be informed, be amused, and not be misled. And sometimes the message isn't what you want to hear, but it is a wonderful day. It's a day to celebrate St. Patty's Day. I'm going to have my diet green tea right here, and we're about to start and tell you all about how the markets are. Thanks to all the new subscribers. They're coming in by the dozens. And if you want to like and subscribe, don't forget to hit the button right there, and we'll be right back with the charts. All right, so let's go to the charts, and we always start with the Dow Jones Industrial Average because it is, after all, the main average everybody follows. As we pointed out last week, the rally in the Dow that has come up over the last several days has been on declining volume, meaning that fewer and fewer people are participating in it. There's less buying pressure, and that it is susceptible to potentially a big drop off. It's also in an ascending wedge. We know those are bad patterns, and eventually they will they always end up poorly. NASDAQ 100 already made its high, I think. I don't believe we'll see a higher high in it, mainly because most of the companies have already rolled over in it. Most of them have, and interest rates are going up. And that's what we've been talking about for about 3 months. And we're going to give Jay Powell a little talking to today about some of his little statements that he made at the Federal Reserve meeting today that was broadcast a few hours ago. The Standard & Poor's 500, same thing. Rounded top pattern, looks like on declining volume again. That means that there's less investor participation in it, there's less institutional money in it, and that means there are less people behind it, and it's mostly, a lot of it is actually new money that's coming into the market. New money, the last money, is always the worst money. So let's go on to the small caps. The small caps have, they look like they've made an exhaustion move, and they've also dropped off on declining volume. Again, that's very significant. Now, it might not be as significant in a particular stock, because a stock, there could be a big buyer, big seller, but when you talk about an index and all the stocks being averaged together, volume does make a difference. And the major indices are all declining volume and rallying many days in a row. That is a really bearish sign. It leads to complacency. And when people are too complacent, that's when they get walloped and whacked. The Dow Jones Transportation Average continues to remain strong. There are pockets of strength. I mean, even though you guys want to shoot the messenger so badly, but the Dow Jones Transportation Average continues to look pretty good for reasons I can't even fathom. But I think it has something to do with airplanes flying with nobody in them. We'll show you that in a minute, because that one is that one. I can't even get that one, no matter how much green beer I drink. The Commodity Research Bureau, and this is really the story of the day. The story of the day is inflation. And, during the Fed conference, this just really bugs me. The Fed comes out and they say, look, we're not going to raise rates from 0. There's no inflation, and unemployment is at 4.5%. Gee, what planet are you living on, Jay? Oh, Jesus Christ, there he is. Yeah, Jay. Yes, I know. Well, where did you get that 2% inflation number anyway? I mean, come on. Well, my rents have gone up by 5. My food has gone up by 5 or 6. My healthcare has gone up by 10. Well, that's because you're a government official and they pay for everything, you knucklehead. Of course you don't notice it. Jesus Christ. Well, look, you are way behind on the curve in inflation and on interest rates, and we're going to have a long talk about this, because you are way the hell off, and 2% inflation until 2023. That's really funny. That's a good one. All right, see you later. Unbelievable. This thing right here, it's called a $50 bill. It's upside down. This thing is worth less and less and less, thanks to the Federal Reserve that prints those things like crazy on a printing press. All right, the Commodity Research Bureau, this is 5 years of data. It is now at almost a 5-year high, because everything's going up in price. Oh, of course, there's no inflation, but this thing has practically doubled in a year. These are commodities. These are inputs into manufacturing goods. some wages will go up with them. And so, of course, you have inflation. You know, rents are going up all the time. Medical care is going up all the time. Education's going up all the time. That is when we go to school. That is when we go to a hospital. That is when we get health care. It goes up like crazy. So I don't know where they get this 2% stuff from. I was going to say another word, but I won't. Crude oil, there's another one. This is up like 800% in the last year. Okay, 800%. $65 a barrel. Crude oil is an input into just about everything, from Ace's dog food to this nice green tea here, which has some, I'm sure has some petroleum products in it. I think I'm going to have some. But I'll tell you this, crude oil is probably the most omnipresent factor there is in production. And, you know, to go up 800% and see a, you know, and have the Fed come out and say, yeah, we see 2% inflation all the way through 2023. We don't see the reason to raise interest rates one bit. Okay, love it. Unleaded gasoline, I know nobody drives, and so nobody cares. Jay doesn't drive, he has a chauffeur, so what does he care? But unleaded gasoline continues to go up. If you look at this chart right here that we have of unleaded gas, you might think it's California's taxes because they keep going up with the gas, but no, it's just unleaded gasoline without the tax. Add the tax on, you start talking $4. Copper miners. Copper is one of the biggest elements in production and housing and everything. Housing prices are going through the roof, which is why inflation is also going up, because housing and autos and transportation are the two biggest costs we have. And yet they don't exist according to government officials because they have chauffeurs and they have expense accounts and they get free lodging. So how would they know there's inflation? They wouldn't know it. They wouldn't see it. Where to go? I don't know. Anyway, this is the Invesco Agriculture Fund. I've never actually used this chart before, but I thought I'd start looking at food prices going up. Believe it or not, one of my favorite places to eat is McDonald's, and McDonald's has had a big price increase in burgers and everything else, even the phony stuff, the Beyond Meat stuff. It's all chemicals. All those chemicals have gone up, and guess what they're made out of? Crude oil, petroleum products. That's why everything goes up when crude oil goes up, because just about everything has petrochemicals in it. All right, this is the Invesco Base Metals Fund. Okay, what is a base metal? That's nickel, zinc, lead, copper, aluminum. These are the metals that go, you know, that basically are mined. They're not very expensive, but believe it or not, if you have a change like a nickel, believe it or not, nickel's worth more than a nickel and a penny's worth more than a penny. And that's why you have a shortage of change supposedly in this country, is because you have inflation in base metals. 5-year Treasury yields are starting to approach 1%. I know that sounds low, but they were at 20 basis points only around 6 months ago. I mean, you look at this thing, and it has all of a sudden just gone parabolic. What's interesting is that the 5-year was not even moving until pretty recently. It was most of the action was the 10 and the 30-year. We're going to go on to that in a second. This is the 3 to 7 year Treasury bond ETF. If you owned a 5-year bond, let's say you owned one, okay? You'd get your 0.2% yield. Oh, whoopee-doo. And you'd lose 4% in 6 months, as this chart shows. I thought these were supposed to be safe. I guess they're not. Is that what I'm hearing? I guess that's what I'm hearing. Yields on 10-year treasuries have skyrocketed. These are now at 1.6. They went up again today. They went up yesterday, the day before that. You know what the reason for that is? I don't have to say it, do I? Inflation! Unbelievable. Here's an ETF of the 7 to 10 year. This is how you would have done holding approximately 10-year bond. You would have lost 10% in the last 6 months. Safe. Buy. Oh my God, you would have lost 10%, but you would have still gotten your half percent coupon. So you'd be okay. Got good news and bad news. 0.5% coupon, good news. Lost 10%, bad news. And these are 30-year Treasury yields. These are now starting to just go kaboom. These have gone up yet today again. They've gone up the day before that, and they're still low. They're still at 2.4%. 2.4% could easily triple, okay? Easily triple in the next, 2 years. And the Federal Reserve came out today and said they don't see a rate increase until 2023. I don't know how, if gas prices and rents and everything else is going up, that you're not going to see something have to happen to curb that, or there's going to be shortages. That's what happens when you have price controls, or you have controls on things like interest rates or rents or anything else. Once the price is not allowed to float to the market value, it becomes in short supply. You see that everywhere, and they're trying to hold bonds underwater here, but they're not. They're not going to be able to. The bond market is bigger than the Fed ever could be, and that's the problem. The Fed cannot forever affect longer term rates like the 10-year and what's coming up here, the 30-year, which we just saw. This is the 20-year Treasury bond ETF. This is, if you held about a 20-year bond, this is how you would have done. You would have lost 20% in about 6 months. 3%, it says today. That was last Friday. But believe it or not, you lost another percent today, another 1.5%. So you lost 5% in 4 days by holding what is supposedly a AAA credit and one of the safest pieces of paper ever. It's not. Trust me, it's not. It can go down quite a bit more from here because we're only at 2.4%. And historically, gee, I can recall a time when the 30-year was at 15, 12. It could happen again. No one thinks it will, but that's why it could happen again, because no one thinks it will and no one's prepared for it. So you guys can hate me all you want, shoot the messenger all you want, but the fact of the matter is, be warned, because this is coming down the pike and it's coming right at you. And if you don't pay attention to it, you're going to get swept away by it. And then you're going to go, God, I wish I'd listened to Marko. All right. These are this is a great hedge for long bonds. It's called the ProShares Ultra Short Treasuries. And basically what this does is it goes up as yields go up. Yields go up, bond prices go down. There's an inverse relationship. This is an inverse ETF, which means it goes up when rates go up. This thing would have made you about 25% in the last 6 months if you had held it. So instead of losing 20%, you would actually been, actually would have broken even to be slightly higher. So it makes a really good hedge, and it's not a bad speculation because at 2.4%, we have the potential of a lot longer and a lot higher to go. The US dollar is actually rallying, and that's kind of a little bit of a mystery. I don't know why really anybody would want the dollar other than the fact that our rates are higher than Europe's. If you go to Europe, you still get a whole minus 0.5 in Germany. Achtung, minus 0.5. Here, take it. That's all you get. Oh, God. Oh, here we go. Bitcoin. Bitcoin is the thing that everybody has to have. It's never going to go down. I gotta have Bitcoin. I gotta have Bitcoin. I gotta have it. When everybody wants something so badly, they never think it's going to go down. That means it's going to go down. Bitcoin may go higher. It may go a little higher, but it's not going to go all the way to $1 million a Bitcoin. The reason being, it really isn't worth anything, although people think it's worth something because it goes up. But it isn't. It's worth something because it facilitates illegal transactions and anonymity in moving money across borders. One of the things that Bitcoin allows you to do is put $1 billion on something like this, walk onto a plane with it, walk off the plane with it, sell it, keep your $1 billion. Even if you left China, they'd never let you take $1 billion with them, now would they? Either in coin or in bills. Gold, one of my biggest disappointments. Love gold. I don't understand why it's not rallying. I think I do understand, actually, and that is the liquidity problem that we are facing right now. Otherwise, it would be rallying. The only other possible reason it's not rallying is because the Fed is actually holding it down. That's something that one of the Fed chairmen way back when, 1982, Paul Volcker said. Paul Volcker was the last Fed chairman when the prime rate was almost 20%. And the thing is, he said about gold had a huge rally then. And he said, if I just had not let gold rally, because it signals to the market something's wrong with the financial system. Right here, you look at gold, everything's peachy. Everything looks just great. So you don't have to shoot the messenger for listening to gold. Gold isn't the messenger anymore. I am. So shoot me. All right. Silver. A little better than gold. It's kind of holding up there. It's sort of in an uptrend. But again, the Reddit rebels tried to push this thing and couldn't. The Hunt brothers tried to push this thing in 1980 when they tried to corner it and shot it up to what was then an all-time record high of $50 an ounce. and they still couldn't corner it, and they lost their shirts. So how are a bunch of other people, little guys, going to make, actually going to corner the market in silver? Not going to happen. It's too big of a market. Most markets are too big to be controlled. If they were controllable, hey, I'd be all over it. All right, so now we're going to go to some of the high-tech stocks, and Apple being one of them, Apple being the high-tech stock. I've said this a couple times, and I'm going to, at the risk of repeating myself for some of the new viewers and welcome back subscribers, all million of you, the millions and millions and millions of subscribers. But Apple, I've said this before, it is the poster child for the mania that we're currently seeing. A mania being an unsustainable point of valuation in the marketplace. Apple is worth more than the GDPs of all but 7 countries. That's right. More than all but the GDP of 7 different countries. So like Germany's entire GDP is worth just a little more than Apple. I don't know why that's the case, but that's the case. I guess they make everything, and I guess you can eat apples too. So who knows? But it's broken down, and it was the first stock to break down, which is why we started to get a little negative on the NASDAQ, and others are starting to follow suit. Amazon, it's a retailer, it's an online retailer, and it's also following suit. It finally broke down out of a triangle. Retail sales, there's a lot of discrepancy of opinion. Apparently, they're not going to, there is some rumor that there's going to be a really nasty February in retail. We'll see. But those stimulus checks going out there, $100 million stimulus checks going out in 100 days. You know where it's all going to go? In the market. It's going to make manias like this even bigger because people are not using it to buy things. They're using it to speculate in things like Bitcoin. As a matter of fact, one report has it that 1/3 of all the stimulus checks are going into Bitcoin. Gee, what a good use of money. And you know what's going to happen to that, don't you? Same thing that always happens. All right, so Facebook actually looks pretty good, despite the fact that they can't write a check a fact, can't do anything like that, right? But this company's doing actually pretty well, and it's in a good pattern. Right now, it actually looks like it's going to break up, and it looks like it's going to possibly rally. So this one is a contra-indicator. You always have to look for those, because once you develop sort of a story or a theme of what's going to happen, you always look for things that disprove that theory. And Facebook would be something that would tell me, might not be happening quite yet. So we continue to see the market sort of teetering on the edge, but there's enough companies out there like Facebook that make me think that it's not quite there, but it sure isn't far away. Google. We love Google. Great pattern. And look at that island top. That is a big island. All of a sudden, it went from Oahu to the big island of Hawaii. But an island top is really an important thing on a chart pattern. While you see Google continuing to go up and up and up and up and up. Good company, earnings are growing like crazy. But you got a bunch of people in that island that have traded the stock. And if it should happen that the stock gaps down, which also could happen if there's some bad news, because it really is teetering, all those people are trapped. So this is not Fiji. This is not Tahiti. This is more like Alcatraz. This is not a good place to be. This is more like Devil's Island. Grubhub. What is the rage with all these delivery companies? I mean, seriously. Whether it's Grubhub, DoorDash, Postmates, all of them, they don't have anything. They don't do anything except deliver a hamburger from point A to point B. They don't own cars. They don't own restaurants. They don't even have employees. They have some kind of GPS that works and a distribution system. If Grubhub is worth this much and it's worth billions, DoorDash worth something like $60 billion, then so should every taxi cab company too, right? Because they're the ones that distribute people out, when they call taxis. So I don't know of any taxi companies that are worth a lot of money. Do you? And I don't think these are worth a lot of money. They just are like hip right now. So hip to have DoorDash, IPOs, all the delivery stuff. Big stuff. Microsoft, again, possible rounded top in a good pattern. And here's where interest rates come into play, which is what's important. Probably should have said this earlier. But when you have, these are the high multiple companies. In other words, they trade at a high multiple of earnings. I don't know, sometimes 30, 40 times earnings, like a Google or an Amazon. And a higher interest rate does is it scrunches the multiple down. The reason it does that is that when interest rates on long bonds go up, the bond capital goes down. I said that earlier. Well, think of Microsoft, or think of an equity, a growth company, a high-tech growth company, as a bond with an infinite duration. So this is like a 100-year bond because it's going to be producing earnings forever. So that increase in interest rates is going to affect everything about this company till the end. And that's why they're so sensitive to it, why the NASDAQ has been coming down faster, and why the NASDAQ is leading the market down, because they are more affected by interest rates than are, say, value companies or banks or financial companies. Although everything's affected by interest rates, they are the one universal key to establishing value. Netflix, I don't even know what to say about this one. I put it half green, half red. It's in sort of a flag pattern. It could go up, could go down. Netflix has had really good earnings, but it hasn't gone up that much, partly because people have already factored it in. The thing about these charts that I love so much is that they basically factor in all the information that is publicly known to investors, and it's factored in a picture. And this gives you the picture of where you're likely to go, and also it gives you a picture of where you should not go and where you should sell or buy potentially if it sets up right. And we'll show you that as those come up. All right. NVIDIA is a high-speed graphics company. It makes chips, really the gamer chips, the high-speed chips, the chips that everybody likes, the Chips Ahoy that I don't like, and it just doesn't, it makes everything but poker chips. I don't know why it doesn't make poker chips, but it doesn't. And, but, it's already broken down, and the semiconductors usually go up almost no matter what. These are like the most sturdy companies I've ever seen, and there's got to be like 50 of them all over the place, and they're all at new highs. So, and here's another one right here, Qualcomm, another 5G company, and it's broken down. Now, Qualcomm and NVIDIA are two of what I would call sort of the second tier NASDAQ companies. The first five I showed you were more the big tier. Those are the $1 trillion market cap companies, Apple being a $2 trillion company. Geez, $1 trillion. What's a trillion between you and me anyway, right? So, oh my God, Tesla! Elon Musk was here earlier, and damn it, if he did not, he cannot take it. That's all I got to say. He cannot take a joke. I gave him crap about Bitcoin going down, why he bought a bunch of Bitcoin. And look at Tesla. What do I like about Tesla here? Why do I always show it? Because it is the leading edge of speculative money. I don't know anyone that doesn't love Tesla. Oh, Tesla, it's the best thing I've ever seen. The cars are going to go up in value. They're going to be robot cars all over. And they think Elon Musk is like a genius. Well, guess what? I don't know if Tesla's ever made a dime. I think its financials are fiction. And I also think that most companies' financials are fiction. And you can't even tell what it's worth. But at its peak, Tesla was worth all but 15 of the country's GDPs. All but 15. So, but Tesla's already down 30%. So if you're one of those people holding it at 800 going, those things are going to 1,000, it's going to go 2,000, it's going to 3,000. Nah, it's actually dipped down in 600s, 500. Watch, pretty soon it'll be at that magic number that Elon loves so much, 420. That's where we're going to go. So we're going to start looking at some of the sectors, and this is the bank sector. Now, the banks are still doing remarkably well, although they didn't do as well today. One of the things that banks do, how they make money is they lend on the short end where rates are low. And they borrow on the short end from the Fed, actually. The Fed is a wholesaler of cash. And they then lend on the long end to corporations or whatever. But as the long end goes up, the 30-year goes up, they actually have a bigger spread. So their profit margin goes up, that's good. But the interest rate marks down all their assets. In other words, if this green tea were worth $1 million with an interest rate of 1%, it's probably worth $500,000 with interest rates at 2%. It kind of works like that. And so when you look at all the assets on the balance sheet of a bank, all of them are going down. The liabilities are going down, but the assets are going down, and that's not necessarily a good thing. So, be careful, and especially because you have negative interest rates in Europe, that's going to be a massive undoing to unwind all those things. And they're not going to stay negative forever. It just doesn't make sense to me that they would be negative ever. You actually pay somebody to lend you money. Huh? No, you pay somebody to borrow money. I don't know. It's too confusing for me to even think. All right, so broker-dealer index. The broker-dealers are they make you broker with all their deals. There are two big deals coming. One is called Stripe, $95 billion. $95 billion. That's what they call it now. A unicorn is $1 billion initial public offering. That's why the broker dealers are making so much money and why you're going to be broker when they show you their deals. One of them, believe it or not, is SpaceX, and that's going for $74 billion. And I keep asking Elon, hey, dude, how are we going to go to Mars if there's no running water? Where am I going to go to the bathroom? There's no Best Western. There's no place to go shopping. They don't even have a bar or a pub to go to. Well, I don't know how he's figured that out, but apparently he's got some answer for that, but not now because he's not here. All right. Dow Jones Real Estate Investment Trust Index, REITs. These are, one of the big questions is what's real estate going to do in this environment? Number one, you have the dollar probably going down in value with all the stimulus and all the money being just thrown around and printed. Well, I'll tell you this. Some of it's going to go in the market, some of it will not, but some of it will go into real estate, and the dollar will go down, and real estate will appreciate from the fact that dollar will be under pressure because it's a hard asset. It's more of a commodity-like asset. The other thing is acting the other way for real estate is the fact that higher rates mean that mortgages go up and it's going to be harder to finance. Airline index. Oh gosh, this is my favorite. This is my favorite lunacy of all. Now, if you look at this chart, you'd think the airlines were the most healthiest sector there's ever been. Well, let's see. About half the flights are being taken. About half the seats on half the flights are full. About half of the employees of the half that weren't fired just got fired. So they have about a quarter left, is what I'm hearing from inside sources that I have. And they need a bunch of parking spaces for all their planes that aren't even flying. Yet they keep going up and they keep sucking in $100 billion. American itself used up $100 billion in February, wants $100 billion more. That's what I call a good company. Why would American Airlines and every other airline need bailouts continuously? That looks like they're priced as if they're going to get bailouts like constantly. This one's called Jets. If you want to buy an ETF of stupidity, this is parabolic hope, is what I call it, because there is no way that airline traffic is going to return to where it was at its peak anytime soon. I mean, even if there's some pent-up demand and people want to go on vacation, they want to go somewhere. For one thing, you've got restrictions on vaccines. You've got restrictions on passports. You have to have some countries are not even allowing people in unless they have, this permit or that permit. So no matter how much you want to travel out of state, out of country, you still have to obey the rules. And that means fewer people are going to travel. And in all likelihood, I think at this point, travel is not something that has been really, Zoom has taken business travel and knocked it completely away. That's what technology does in an age like this. It knocks it away, and you're not going to need as much face-to-face type meetings as you did before because you have Zoom. And you can kind of be face-to-face. Just wear your mask when you're on Zoom so you don't give COVID to anybody. And the healthcare sector is also breaking down. It's a large part of the economy, and one kind of wonders why it would be breaking down with all this sickness going around and all these medicines required to treat the side effects of the vaccines, which are needed to treat the other vaccines. So we need vaccines for vaccines and meds for vaccines. Should be doing pretty well, but it's not. Semiconductors. As you've heard, there's a chip shortage. Not here. We have lots of chips here, but apparently cars are going electronic. And so because they're going all electronic vehicle, they need lots of semiconductor chips. And that's why you see semiconductors go crazy, in addition to the fact that there's actually, believe it or not, a shortage of them. FedEx Corp is majorly important because it transports goods. And transporting purchased goods is one of the most correlated sectors of the economy there is. It looks like it's bouncing just a little bit, but I don't think it's going to be much more than a bounce. We'll see. But it looks better than it did. Freeport-McMoRan is a large copper company. And again, look at the parabolic run of Freeport. It looked like it was going to come in. And only last week, believe it or not, after a 500% increase, Goldman Sachs said, buy! So you buy something after it goes up 500%, right? Yeah, right. Okay. Ford, again, parabolic because of the thought that Janet Yellen is so pro electronic vehicles. Only 10% are going to be electronic at the end of the day anyway, so I don't know why this thing is going up like crazy. It's still stodgy old Ford. They still make the same cars. This is Stellantis, or I call it praying mantis, formerly known as Fiat Chrysler. This one did something unusual. I put this chart in there simply because it broke out of a rounded top, and it broke out the wrong way. That's to illustrate the point that all of this trading and charting is odds making. In other words, when you have a certain pattern, you have a certain probability that something's going to happen, but it's never guaranteed. And you always have to watch for that exception to the rule, like here. And this is an exception to the rule where it actually broke up. We'll see how far it goes because, after all, those stimulus checks are not going to buy a car. General Motors, same thing. I mean, again, this thing sells, if it were valued like Tesla were valued on a per car basis, this thing would be worth like 20 trillion or 30 trillion dollars, but it's not. It's worth a whole hell of a lot less than Tesla, and it sells a whole lot more cars. Nordstrom's also broke out of a rounded top. Retail is not doing that badly. I think the stimulus and all the talk about that, 100 million checks in 100 days. Well, some of it's got to go to a store. I don't know if Nordstrom's would be the place, but it did all of a sudden shoot up, and it looks like it's doing okay as a retailer. Target, doing crummy as a retailer, is doing actually really well, had great earnings, and it just went kaplooey. So Target is not doing too well. UPS, just like FedEx, rounded top, bearish, could break out up, maybe not. But again, UPS and FedEx are probably two of the most correlated companies to the economy that there are, bar none, which is why I tend to have them all the time. Walmart, well, what can we say? Walmart is one of the largest retailers, if not the largest. I think actually Amazon may be even larger now at this point. But Walmart has already broken way down. Walmart shoppers are already tapped out. And basically, stimulus or not, there's nothing at Walmart that anybody seems to want or that shareholders seem to think they want. And now we're going to go on to what we call Hoot Loot. Hoot Loot is not only the name of the show, but because this US dollar is so yuck, I just threw mine. I don't know where the hell I put it, but it's yuck. So we've created our own kind of currency, and it's backed by the full faith and credit of Markonomics 101. In Markonomics, we trust. This is Hoot Loot. This is one hoot. We have them in lots of denominations, and you're going to be seeing them all over the place because these are worth more than the greenback that you've seen, the crummy old thing that you stick under the mattress and smells. And finally, even better than that, we now have, for all you Bitcoin aficionados, we have Hootcoin. Hootcoin is going to be a collector's item. This is something that will go to millions of dollars a coin. You better believe it. And we're going to have them here for you very shortly. They're going to make great Christmas presents. And believe it or not, you can probably buy a house with it more easily than with Bitcoin. Anyway, with that, I want to say thank you very much for being here. Thank you to all the subscribers. And it's been a fabulous show. It's been great seeing you guys. And we love y'all. Don't forget to like and subscribe. And maybe the messenger of bad news, but I'm sitting here in this bar having a good old time. And if you don't like the message, I got one thing to...